What's up, guys? Eric here, Mr. Fired Up Wealth. I want to talk to you guys today about cryptocurrency. It's a hot topic. A lot of you have questions all the time, and I'm not a cryptocurrency or blockchain guru by any means. So I'm bringing a friend of mine onto the show today, and we're going to do a live Q&A. I actually got questions from the Fired Up Wealth community on Discord, and I'm going to ask Tommy Cooksey some questions about cryptocurrency and blockchain. You're definitely going to want to see this one. Stay tuned. So basically what I'd like to do, Tommy, first, I guess, welcome to Fired Up Wealth. Welcome to the show. How you doing?
Hey, Eric. Nice to be here. And thanks for having me back. I'm excited to talk to you and your fans about cryptocurrency and what it means to the industry and what it means to them.
Absolutely. So if you don't mind, maybe just share a little bit of background. I know you've got your own YouTube channel. I'm going to put a link below so people can actually go check out your channel. Definitely subscribe to Tommy. Tommy and I used to work together. We've known each other for many years. So if you could just provide the community with a little bit of a background of what you're all about.
Yeah, I'm an educator. I love to teach people about technologies. And my thing is I want to take something that's really hard to understand and make it simple so that you can digest it and understand what the value add proposition is of it. And I've been able to do that with a lot of different technologies throughout the years. And Eric and I worked for in a big ERP kind of wing of things. And I started to see how we were protecting our data with these enterprise products, but we weren't able to access that data. The data didn't mean much to us. We weren't able to really leverage it. And a lot of times the reason for that is because of provenance and non-repudiation, and not sure where the data comes from. And I figured out how to do that was through cryptography, right? We could start to use cryptography to figure that out. And we saw that in a lot of those products. But then when I saw it was happening automatically in cryptocurrency, ding, 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 the lights started going off. And so I jumped in head first, and I haven't looked back since. And so that's really what's brought me into, I think, to the industry. So I'm happy to be here with you again.
Absolutely, Tommy. Appreciate it. So let's just get going. I've got some questions from the community, like I mentioned in the intro. So the first question I have, what's the prospect in terms of adoption level with blockchain? Example of an industry ABD. So example, industry ABD, it makes life easier and more accessible to business. Cryptocurrencies in general are decentralized, but with the level of theft and scam, should there be regulations like the stock market has? What are your thoughts on that?
Let's talk about regulation. So when we get into regulation and we talk about decentralized networks, there's a few things that are involved here that need to be discussed. First of all, there is a need for the ability to be borderless, right? Especially when you start thinking about money. You should be able to be a citizen and be able to go and move between borders and not have to worry about that affecting your wealth. So when we start to look at currency, for instance, like within Bitcoin, I feel like that there's always going to be that one that is borderless, that has proof of work, that really no nation state can take over. However, when you start to look at the individual transactions that are occurring in the business workflows, that's when we want to start to layer in logic. And it's not just about moving an asset or just changing the value of storing a value in something and changing that store of value, which is what Bitcoin does for you. You want to do more with it. You want to layer in governance. You want to layer in, like you said, you want to layer in some layer of oversight. And so with that comes regulation. And regulation, in my opinion, and by a lot of other people in the crypto industry, is welcomed because that's going to drive adoption. And we want regulation. We want the government to say, yes, this is how we're going to regulate this, but we don't want to over-regulate. And that was one of the big discussions that Cynthia Lummis, the senator from Wyoming, proposed against the infrastructure bill, was that she wanted to make sure that a broker was clearly defined. Because in essence, everyone that is mining Bitcoin can't track every single individual that is writing transactions. And that's, in essence, could have been determined that way, the way they were interpreting a broker. So it's really important that as legislation and regulation is created, that they consult the people that are experts in the industry and talk to those people that do want to bring good regulation to the industry and bring adoption. And again, we welcome that. We're not trying to be anarchist or trying to make some crazy solution that's going to bring down the government. That's not it, right?
Excellent. That's really good insight. I appreciate that. So the next question, with governments considering issuing their own digital currencies, will that, number one, provide a credible alternative to cryptocurrency? And number two, make existing cryptocurrencies irrelevant since the government digital currencies will be supported by regulators?
And so therein lies the interesting concept of trust, right? So you have to think about blockchains in general as trust brokers. And so when you trust your government, fortunately, we in the United States do, then that's probably okay. But, we've seen just egregious printing of currency over the last couple of years. So we need to probably put some type of a handle on that other than the Fed, right? So there needs to be some level of regulation probably that needs to be involved there that has more transparency in how that currency gets distributed. And so in that respect, I welcome that concept, but I highly press back against that, because I feel like as soon as you can eliminate all cash, then you really start to live in a controlled society, right? And so there needs to be some level of cash distribution and not complete elimination of cash transactions, I think. But I do think digital currencies can serve well in a good republic, but in a controlled society, it could be used against the citizens, and so that could be bad. We see that happening in China, where a loaf of bread for you might not be the same as a loaf of bread for me, and that's just that's where the effects of that come into play.
Right. So a question for me, because this is one, if I were new to cryptocurrency, a lot of investors follow the channel and they might not be able to make sense of crypto. So the question I get all the time is, I'm new to cryptocurrency. At first, I kind of ignored it, but it's becoming more and more relevant that everybody's talking about it, and I just don't really understand it. So could you explain from a high level, and I know this is a deep question, you could spend hours on it, but from a high level, if I'm new, what is blockchain and cryptocurrency just really all about? If I were brand new and you wanted to just give me a couple minutes to give me a background.
I've thought about this a lot, and I've tried a couple different approaches to this. And honestly, how big is the internet to us today? It's huge. The internet has an Achilles heel, and that Achilles heel is it's highly centralized, and it's centralized by the platforms that control the data. We know the names: Facebook, Amazon, the list goes on, even Twitter. And so what has happened is when the internet was created, it was created by a gentleman, named Tim Berners-Lee, created kind of HTTP, right? And linked list of data. Prior to that, it was just a network that, was communicating all of this information, right? And then the web is all the information that we're putting on top of it, that data that we have. Of course, that information, we didn't know where it was coming from. It was just there. And if we could access it, then we could see it. But if I can sign that data, and I know that data is where it's the provenance of that data, and I can give ownership of that data information, then now the internet has the ability for us to transact. Now we have digital scarcity with these signatures and transactions. What this does is it counters the problem that we saw with Napster, right? With Napster, we didn't have digital scarcity, meaning that one MP3 file could be copied over and over and over again, and it was the same thing. It was the same results. But now we can have digital scarcity and define specifically who does that particular file owned to. So when we start thinking about things like intellectual property and things like that, we can start to see exactly who has ownership of that property, and we can see through that digital signature. So we can start to manage things much better. So what I like to say is Web 2, which is what we're on now, the internet, Web 2 wanted to be Web 3, but it couldn't. It didn't have the technology. It wasn't there. It couldn't get there, right? So Web 2 wanted to be Web 3, but instead it was sold as an NFT, as a non-fungible token. And what I mean by that is Tim Berners-Lee, that guy that I was just talking about that created the, kind of the first protocols that we use on the internet, he packaged that together, that code, and sold it as a signed non-fungible token on a blockchain. So he signed it with his wallet, so it came from him, and he sold it as Sotheby for almost $6 million, right? And so with that being said, Tim Berners-Lee wanted Web 1 to be Web 3, but instead he had to sell it at Sotheby for auction, and he got 6.3 million. We got a little poetry going on there, but that's exactly what happened, right? So what I'm getting at, and let me just try to tie all this together, is the internet was still kind of in dev phase. Now it can really do what it was designed to do. We can transact. Eric and I can transact with nobody else involved, and nobody needs to be involved. And we can do that through cryptocurrency, and no problem. And we can do that borderlessly, no matter where he's at in the world. And that's something that we've never been able to do before. You can apply that to remittance and all kinds of things. So I guess the easiest way to understand, what this is doing is it's the fourth industrial revolution. If I can make that resonate with you. Once everyone starts to understand the process, they're going to realize that digital scarcity is going to be the way that we have provenance for any kind of proof of anything or any claim. And you'll be able to check that digital scarcity and verify and validate it and prevent things like fraud and abuse and abuse of power and all kinds of things. If it's used right? We got to use the tools right. So just like any tool can be abused as well. Right.
So when you think of historically, gold has always been kind of a safe haven. In fact, Palantir just bought, a bunch of gold, actual bullion, instead of the GLD, they're actually bought gold blocks that they're going to store like in a Northeast facility. And of course, all the doomsday people come out and say, in case of a black swan event. Now, the amount they purchase really, to me, isn't that staggering, but it does raise eyebrows and get attention. So when you think of gold as kind of that safe haven, how would you compare something like Bitcoin? Like, in your opinion, do you own both? Do you just own one or the other? What are your thoughts on gold?
So gold's an interesting resource because traditionally gold has very small amount of utility. I mean, it's used in computers, it's used in jewelry and things like that. But generally speaking, I can't build construction with it. It's not a good tool for structural resources, maybe for electronics, but gold as a personal investment doesn't provide any utility. The only thing that it does for us as an individual is it provides a store of value. That's it. Now, if I decide to use that gold to exchange that value, I usually have to take it to a gold exchange, sell it out, pay the fee, and then turn it into cash, then turn the cash into something that I can spend. Not only that, I also had to pay a fee. Somebody's going to have to store all that gold if it's of any substantial value or size, or I'm going to have to invest in some type of security infrastructure in order to be able to store it. So there is a certain level of maintenance cost involved in just having ownership of that physical asset. When I look at a Bitcoin, if I own a Bitcoin and I put it in my KeepKey, so this is my wallet, it's right here. There it is.
What you got in there?
I got a lot of things in here. I got some Bitcoin in here. I got some Ethereum in here. I bought some salt and put it in here recently. So if you want to check that out, but there's a lot of stuff on there, and it doesn't matter if that wallet gets stolen because you don't know my PIN, and you can't get in there unless you have my PIN. And even if you had access to this with my PIN, then I could still go ahead and get it with my seed phrase. So I have, I think, 8 words that is my seed phrase, and I can access my wallet and reseed it on another wallet and get access to my stuff. So I have to protect my seed phrase and I have to protect my data. That's my security, me. It's just about my ability to protect those assets, right? And I take certain measures to do that, right? And obviously, for operational security reasons, I'm not going to reveal those, but that's easy and it's very low cost, right? So I'm not paying anybody to store this. It's right here on my desk. And even if it burns up, if my house burns down, I have a copy of my seed phrase with trusted people, right? And they can just, I can call each one and say, well, what word did I give you? What word did I give you? What word did I give you? And I can reestablish my seed phrase.
So show us that again. What exactly is that? What's
This
it called?
It's called a hardware wallet. So this is a Keep Key hardware wallet. I have another one in here. I got a few of them around here, but I have a Ledger Nano. I have a Trezor. I have pretty much all of them. But the Keep Key is the one that I like
the best. That's the one you like the best, though.
Yeah, and I'll tell you about this one. I know that somebody had asked some questions about liquidity and some things like that. This one's a pretty interesting one. So let me kind of tell you the backstory on Shapeshift and KeepKey, which is Shapeshift is the parent company. KeepKey is the wallet that the parent company created, right? So they created this hardware wallet, but they also have the Fox token, which is the Shapeshift Fox token. It's called FOX. This gives you the ability to trade currencies. It gives you the ability to manage your wallet. It gives you the ability to look at your assets. It gives you the ability to look at all of your stuff. And not only that, but you can also take, like, for instance, I have several Ethereum on this thing. So I just take my Ethereum that's on here and I roll it up into this smart contract called a liquidity smart contract on Uniswap. And I pair my Ethereum to their Fox token, and I'm basically what we're calling farming, right? So when I first started doing this, it was paying 800 APR, 800% APR. I made like $600 on a $2,000 investment in one day.
Wow.
In farming. Now it's down to like 122%, I think, or something like that. But that's pretty freaking awesome, man.
Yeah.
I mean, but those are the kinds of things that you can do, right? Those are the kinds of fun things that you can do. And in this wallet concept, it's a guy named Eric Voorhees. It's really an interesting thing that happened here. Is he's in Denver with the Shapeshift company, and they were a centralized company that was creating the wallets and all the standards and everything. And when I told you about the farming concept, how did that come about? Well, because they couldn't get anything through governance. They couldn't get governance to approve what they were trying to do as an individual centralized company. But when they decentralized, they were able to do it. So what he did is he just turned his company into what's called a decentralized autonomous organization. I mean, he created all the rules around it and then just opened it up. And so now, since I'm farming those tokens, I'm a part of an owner of that company. And so that's, in essence, the DAO, the autonomous organization, is all of the owners of the tokens can vote on initiatives and changing structure of the company. Pretty amazing, but yeah, it's pretty cool.
That's really cool stuff. So I guess while we're on this topic, so I think one question that people would probably ask is, let's say they don't want to dive right into cryptocurrency. They don't want to, start buying cryptos. And I get the first thing I'll say is I do own, some altcoins, but for the most part, I own Bitcoin and Ethereum. I bought it in 2017. For me, it's what I call spec.
Oh, yeah.
I know for you, like your whole portfolio is crypto, but the majority of my followers on Fired Up Wealth, they're, probably not deep into, there's maybe a few that are, but it's kind of a spec, a percentage of their portfolio. So one thing that we might get a lot of questions on is, if I wanted to play that space, and I have a couple stocks in mind, I'm curious of your opinion. If I wanted to play that space, but maybe indirectly, right? So maybe like an outlier type stock that impacts from cryptocurrency, what are some of the names that you might look at?
Yeah, so great question. And I'll just be honest with you. I look for a few key things when I look at a cryptocurrency project. I look at leadership, and I look at technology, and I look at community. So those are the three things that I really want to see that they have. And if they have those good, if they can check the boxes on those things, then usually I'll invest. And so the ones that I look to specifically, I already mentioned the Fox token with Shapeshift. I think Eric Voorhees, as a pioneer, he's done a great job, and I'm excited to see what will happen with that. But in addition to that, another one that's going to be important, I think, is going to be Cardano. It is a founder of Ethereum, one of the founders of Ethereum, Charles Hoskinson. He actually left the project during the DAO hack, if you're familiar with the Ethereum split. And he left then and he started Cardano. And so Cardano is going to be releasing their smart contract platforms supposedly towards the end of the month, this month, I believe. And so I'm really excited about that. And Cardano is really, I mean, like even in the last few weeks, it's just been blasting off. And I had mentioned that one to you, I think the last time we talked, and it's probably quadrupled or at least that much since the last time we talked. Another big one is going to be Polkadot. Now, Polkadot is going to give you the ability to communicate from one block, because blockchains are kind of its own bubble, right? Think of a blockchain as it knows about what's going on inside of the blockchain, and that's it. So if I need that blockchain to communicate to that blockchain, I have to have some intercommunication concept. And Polkadot provides that. That's one of the key concepts of Polkadot. And so I feel like that one's going to catch a lot of traction too. And Dr. Gavin Wood, who is their founder at Polkadot, he is also one of the founders of Ethereum, and he created the Solidity smart contract language. So the language that we use to write smart contracts on a Solidity, that's his baby, right? So I feel like that's going to be a pretty good project to take a look at and probably follow and invest in. And I don't feel like there's a lot of risk there with both of those. Now, the next one that I really feel like that is a really good project is Civic. And Civic is a little different. I'm not even sure who's in charge of Civic, but the reason that I like Civic is because the biggest problem that we have to solve, I think, with cryptocurrency as a republic is, as a free nation, is we have to solve the problem of self-sovereign identity. You have to own you, right? You need to be able to own your own stuff. And Civic is trying to attack that problem so that you can use these things called zero knowledge proofs for various claims that you have about your identity. So as an example, if I claim that I'm a certain age, I don't have to provide an ID and all this stuff. You don't need to know where I live and all this kind of things. You just need to know that I'm over a certain age. And you can verify that through the Civic platform without having to reveal all that additional information that you might do when you're passing off an identification piece. So I think that's another really good one. So those are three that I think will be great projects to look at.
So I love the answer to the question because it shows that you're really a crypto enthusiast. Because what I was actually looking for is outlier stocks, so stock market. I'm thinking things like Coinbase, and I know that's not really. I
invested in Coinbase in its ICO, so that was kind of fun. It's doing pretty well. I would say that one of the ones that I've been following, and man, Eric, you can probably attest to this. I've been preaching this one since it was at $3. I was like, buy this stock. And what it is it's a company that created a bunch of mining rigs, right? So they invested in mining and invested in trying to place those mining operations in areas where electricity couldn't be used, where they were just burning electricity off. So that is Riot blockchain. And so Riot blockchain, I think probably some of you have seen it. I think it's trading at $35. It's went up to $60. But yeah, I mean, I've rode that thing for 3 years now. And I think it's a good stock. I think I feel like that it's, they're doing good things. I feel like that, especially Texas, what's happening in Texas is they're trying to lure a lot of the miners from China to come to Texas, because there's a lot of power that is being acquired there on their grid through the wind and solar and things like that, but they're not able to actually use it because they have to push it so far. So if they could set up some mining rigs there, they could start to use some of that power and actually start to find profitability from it. So
you think of like Coinbase, is that something? I know there's a lot of negative sentiment in the market. You think of the stock market. Do you think Coinbase will be around? I mean, one of the concerns is that, as it becomes commoditized, their fees come down and it's going to be harder to compete. And there's a lot of other people that are trying to get in that space, other vendors that you can buy cryptocurrency from. Even like Robinhood, I think is messing around in that space. So do you think of Coinbase as being kind of best of breed, something that survives, or is it something that, will falter as time goes on?
Coinbase, I'll be honest, they stole my idea. And I say they stole my idea because I had it and then I saw it on their platform like 2 weeks later. But I've always had that concept of learn to earn, right? And that's something that Coinbase is doing that I think separates them from the crowd is, as an early adopter, if you just set up an account on Coinbase, you can go in and watch their little 3-minute videos and get you $30 worth of crypto, and you're rolling, right? And so now you got a portfolio. Holy cow. If you're a teenager, that's kind of amazing, right? As a professional, maybe not so much, but the important thing is I think that what Coinbase is they're constantly innovating. And as long as they can continue to do that and listen to the market, they're going to stay ahead of the market because they have an easy to use product and it's easy for you to onboard onto crypto. Robinhood is the same way, but Robinhood, you're limited to what you can buy. I use Robinhood. I use them both. When I buy and sell on Coinbase, I pay fees. When I buy and sell on Robinhood, I don't. I pay my monthly fee, right? So it depends on what I'm trading and how I want to liquidate, how I want to spend the money. And this makes me decide on where I'm moving that money from. But I use Robinhood more as a pocket wallet, right? That's my pocket money. Whereas Coinbase is more long-term investment money, so I'm not spending the investments and the turnover there.
Makes sense. So more of a trading account in the Robinhood, and yeah, that's a good idea actually. So that's good. So yeah, I mean, Coinbase was one that it honestly has great earnings. I mean, the growth has been accelerating. It's one that Kathy Wood and their ARK, Invest ETFs have been buying. The sentiment's just really bad, especially on social media. It was an expensive IPO, like all these IPOs. They start at one price, they end up releasing to the general public, to retail investors like us at much higher rates. I remember even like Snowflake. I tried to get into Snowflake. I'm an accredited investor, and there wasn't one IPO I wanted in the last year, that I could get into pre-IPO. Whereas in 2019, you think of, CrowdStrike and some of those, you could have actually got in pre-IPO as an accredited investor. So the demand is just really, really high. But Coinbase, it seems like the sentiment's really bad, and a lot of people maybe just don't understand it. And I did a couple of videos on it, tried to kind of educate the community, and it feels like it just doesn't resonate. But to me, Coinbase, you talked about how it's easy to use and they're kind of ahead of the curve. It's founder, led CEO. He's been doing it for a long time. He gets the business. It's a little bit surprising some of the altcoins they've added over the time, but they give the audience what they want. If they want Dogecoin, well, we're going to give you Dogecoin, right? So the other thing I think with them is they're trustworthy. They've been around a while. It's easy for a casual investor to trust somebody like Bitcoin, not Bitcoin, but trust someone like, Coinbase versus going to some new, platform that you don't know anything about. And you think of like Binance in China, there's people's accounts have been just like closed down and liquidated. I actually had an account.
I'm not a Binance fan.
Yeah. And I can't even get my money out of it. I think it's based in Hong Kong or something. So, there is that trust factor too. And Coinbase is probably as safe as you're going to get,
If you want more advanced functionality, which is probably what some of your users are going to be looking for, more of advanced trading functionality than what you can get with Coinbase, definitely look at something more along the lines of Kraken or KuCoin. Kraken, I've met Jesse Powell. That's their founder. He's an amazing guy. He's a really straight shooter. And wants to do good things. So, you can check them out, but, they're really good. And I personally use KuCoin. I've been using them forever. And it's just because the company I work for, that's one of the first exchanges they were listed on. So, but anyway, so KuCoin, actually, they're pretty good. I mean, they got a lot of functionality. There's a lot of cool stuff in there. So, check them out. I would, just like anything else in crypto, consider it, it's risk. It's not a sound investment. And of course, this is an investment advice, and I'm not all those disclaimers. But
right. Yeah, that's a good segue. I mean, yeah, I mean, this is obviously just conversational. I mean, there's a
Yeah.
lot of risk in any kind of new market. You can make a lot of money. You can lose a lot of money. This isn't financial advice. We're talking about, what's out there and giving you information. You guys decide what's best for you. But so a couple more of these questions, Tommy. It's been great so far, and I appreciate your time. So one of the questions that we got from one of the members: what growing pains or stumbling blocks can investors expect regarding the rollout of smart contracts? Can you give some thought on that?
Yeah, what I'm thinking that we're going to probably see, with smart contracts, especially as users are starting to adopt them, right? So I think that we're first going to see disruption, right? So you're going to see industries being disrupted either because a smart contract can do what they're already doing because it's a middleman function. Let's say, for instance, you're closing on a house, and that's something that maybe can be automated through conditions in a smart contract. So those are things that I would definitely be aware of. But just be ahead of the game on that, right? So just be looking into research and how you can provide the service or the functionality. I always say that in computing, if you're doing the same thing every day, you're at risk to be automated. So you should always be innovating. You should always be thinking of new ways to do things and better ways to do things. And so with that, the other thing I think that with smart contracts that we'll find is, and I'm seeing it already happening, and a lot of I think of your listeners will like this, is they're using it as a storage container for investments. So let's say, for instance, if you buy so many investments, you can place them into a non-fungible token storage container, place the rules around that storage container, and say, here, this is a gift to my niece when they turn 18 or whatever, right? And so you can start to automate those rules at minimal cost. And so, a dead man switch, I have one. If I don't send an email at a certain email address, every month, then it'll know I'm not around anymore, and things will happen, right? So, so you can just do those in smart contracts.
Makes sense. So this is kind of an add-on to a previous question. This is from a user in Discord. I don't know everyone else's view, but one of the main purposes of crypto is to have decentralized currency. We talked about this a little bit earlier. Government making their own, in my opinion, defeats the purpose. What are your thoughts on this?
Yeah, I would agree with that. And that's where that kind of ties back into what we talked about earlier with Bitcoin, where I think Bitcoin will win that war, where it's going to just always be decentralized. And it's not going to be under any government's control, because it allows you to counter. It's the ability to counter those big governments. We in the United States, we try to build a government of equilibrium of powers, right? Between state and Senate and Congress and our judicial bodies and that type of thing. But we don't see that distribution of powers in every geographical region. And so when we see certain governments, especially governments that like to have control over their citizens, leveraging this technology, that needs to cause us to want to start pumping our brakes. Even in our society, when we see litigation trying to leverage the technology to infringe upon your rights, we need to pump the brakes. So it's going to be important that we just know how the technology is being used and it doesn't get used, in a bad way. Yeah.
Makes sense. Yeah, that's really good. So another question here. Can you weigh in on the issue of crypto exchanges manipulating transaction volumes to boost their rankings or valuations? That's a dicey one.
Yeah, that's a big question. That's the old Sybil attack, right? Right. So the concept is that you don't really know if it's a human or not. You can just generate lots of computers that are doing lots of things, and so with that being said, I can pump volume. I can make it look like I have volume. I can create conditions that it makes my coin more attractive, right? And that happens with a lot of market manipulation. And unfortunately, I think it ties back to what we were talking about earlier with regulation and having some level of compliance, right? And so maybe once we can start putting some of that stuff in place, it'll remove some of that that blatant abuse of power. And you do see that. So, you just have to, try to vet the actors as best as you can. As you mentioned, you had a Hong Kong exchange. For that very reason is the reason I never really invested in it, even though it was the biggest exchange. I was like, I'm not really big into investing into that exchange. So
yeah, luckily it was like a few $100. It was not a lot. It was something I did when I traveled, to clients, and I would be on planes and I would trade a little bit, but it was really just kind of play money. So I'm not losing sleep over it. All of my big stuff was in Coinbase, and luckily I did that. Right. So, so this question is actually kind of interesting. You can answer it however you want. It's an interesting question, but I thought I'd read it because it does probably pique some interest. Question: is there an upcoming bull market? We're kind of already in it, I guess, but just last week, Tether printed $1 billion to pump liquidity and is printing another $1 billion. Ethereum DeFi lockup has reached almost the previous peaks. Most coins are 50% up in the last week or so. Can you please provide some insights on this?
Yeah, we're facing a liquidity squeeze. You nailed it right there. I don't know if you, for the person that formed that question, there's an Ethereum improvement proposal 1559 that basically is burning Ethereum every time a new block gets created. So at some point, there's going to be less rewards than what is burned. And so it's in essence going to create a deflationary currency, just like what we see with Bitcoin. And so with that being said, that's one thing that's affecting the supply of Ethereum. Second thing that's affecting the supply of Ethereum is, the fact that we're locking this up, like you just mentioned, into these locked up contracts. Now, one of the big contracts that we're locking it up in is ETH 2.0. So what ETH 2.0 is going to do is it's going to change from proof of work to proof of stake, which is going to make the network more efficient as far as the block creation process and that type of thing. And it will be able to do it much more quickly. And so once that happens, then you'll see a lot of the transaction fees come down, and you'll see the transactions per second should go 10 times 10, right? So 1,000 times, right? So, or 100 times, right? So 100x, should 100x 10 times 10, yeah. So 100x, should 100x the transactions per second, which is, that's more than Visa at that point.
So rapid fire, I'm going to do kind of a lightning round rapid fire, just a bunch of questions, just do quick answers here.
Okay? Yeah.
So what's the first crypto that you ever bought and when?
Dragon Chain in 2017.
Okay. So Bitcoin, when did that come into the picture? Like, how long did you wait before you actually bought Bitcoin?
I bought it probably around the same time. I might have bought Bitcoin to buy Dragon Chain. But my purpose was to get into Dragon Chain. I worked for that company, by the way. But I wanted to buy some of the investment that I was putting my hard-earned time into.
How many cryptos do you own? You don't have to list them all, but just approximately how many do you have?
100, maybe 100.
And what percentage of your retirement is in crypto?
70%.
And I think that's good perspective because, for me, it's like 1%, 2%. And that's why I want to bring you on because, you're a crypto guru and I'm certainly not. So I get questions from the community all the time about, this, and this. And I don't pretend to ever be somebody that I'm not. Right. Sure. And I've been, it's interesting because I used to be a gamer. I played World of Warcraft. And I remember back in the day, people buying Bitcoin when it was really cheap, like in the, $100 range or something like that. And it was just like, why would you buy that? They were buying what they were doing is they were buying Bitcoin so that they could buy gold. It was kind of, it was against the rules, but Chinese gold farmers, right? Because you use gold as the currency in the game to buy all the stuff you need, like, better gear, weapons, whatever. So you'd buy Bitcoin and then you'd go to this, black web type website and they would buy their gold using Bitcoin. And I had a couple of friends that, California guys that were really into this stuff that actually, didn't use all of it. They kind of just had it, forgot about it, and was worth a lot of money. And it's a pretty cool story. You see all those stories, like some dude, bought a pizza for $35 with Bitcoin, and that would be worth, whatever, $1 million or, whatever. People throwing away computers that have millions of dollars of Bitcoin. So it's
trying
very
to get
interesting.
the landfill to, there was a guy that was trying to get the landfill to find his computer for him.
Yeah.
He was going to pay him and split the money.
So you're a smart guy and you understand, behavioral economics. You think of, the Tulip Bubble, right?
Sure.
What do you say to somebody that says, well, this is just like, the tulips back in the day?
That's a great argument. And you hear it a lot, especially from the big, from the gold maximalists, especially those guys, Peter Schiff, especially, is one that kind of rings true to me. But, I just counter with this, the Germans used this same cryptography to talk to their U-boats, and we did not break it. We didn't break it. SHA-256 has been around since World War II. We've never been able to break that level of encryption. Hard encryption was illegal to be deported out of the United States until 2006.
I didn't know that. That's interesting.
Okay. That's what we use for this. So you got to break that in order to be able to bust the bubble. Okay. So yeah, if you can do that, cool, but it hasn't happened in my lifetime, not in my grandfather's lifetime. So I'm pretty confident that the math works. And so that's what I trust in. So, the math works. And so I trust the math.
Is there anything else that you want to tell the viewers? Just anything we might have missed that you want to cover?
One thing that I don't really get into a lot, I know a lot, especially with most of you as investors, you're looking at this as an avenue for you to make money. Personally, that's not what I do with my career. I actually work for a company called Chain, and we help companies adopt blockchain solutions. So when you start thinking about adding immutability or decentralization to your workflows, or having, ownership of data through tokenization or some type of NFT program, we can help you with that. So please take a look at our website, simbachain.com. We got some tools out there. You can take a look and start building out some cool, fun things. And if you have an idea and you want to expand on it, let us know, and maybe we can build something for you.
If I'm new to crypto, the first thing I want you guys to do is, if you're interested in this stuff, definitely follow Tommy's channel. It's just his name. I'll put the link down in the description of the video. You can go right to his YouTube channel. Make sure you subscribe, check out his videos, give him likes and comments, ask him questions in there to help his channel. Tommy and I are friends, so we're trying to help each other out and help our communities and help Tommy grow. So definitely check out the channel. Other than your channel, do you have any resources that'd be really helpful if I'm brand new to this and it's just like a complete new world, new universe to me? Where would I go besides your channel to maybe get more information to educate myself?
I would go to Bankless. There's a gentleman by the name of Sean Ryan Adams, and he runs bankless.com. And it's just really good. If you just really want to understand the financial side of this, especially the DeFi side of it, which I think most of your listeners are going to be wanting to look at that part of it. That's probably one of the best places to go to take a look. I encourage you to go out and check out my YouTube channel. I'm going to be creating short videos to kind of explain some of these technologies, in addition to some of the videos that I already have there. Eric had mentioned a guy spent $10,000 or 10,000 Bitcoin on a single pizza. But I explained why that is important, because it was the very first transaction that was really ever recorded on a blockchain. So I got a video on that on my YouTube channel, and I show you where that transaction occurred and all that kind of fun stuff. So certainly check that out, and you'll get a little bit of background on that. But lots of fun things out there, and check it out.
So you said 10,000 Bitcoins for that pizza? Is that what you said?
10,000 Bitcoin for the very first transaction. Yes, sir.
Okay. So that's like 480 million. Am I doing my math right?
$480 million. Okay.
Yeah, so I was a little bit off with my $1 million. So yeah, that guy has to have like anxiety, depression, regret, remorse, FOMO.
His name is Laszlo. Yeah. And it's Laszlo. But you know what? The funny thing is the before that, it was just a bunch of geeks trying to say my computer's faster than yours and I get the tokens. And now we decided, we're going to exchange the tokens. Now we have a meeting of exchange. And so that was really important. Even though he made that mistake, he kickstart the industry. So we owe him a little debt of gratitude for that.
Yeah. And I could ask more questions. I think we should do this again because I have a lot of questions about Bitcoin mining, sustainability. We could go on for an hour on that. You think of like
on a schedule.
Yeah. Tesla saying, well, we have Bitcoin. Well, it's not sustainable. The first thing I said when Musk said that they were buying Bitcoin, I'm like, oh boy, trying to push this whole green thing. And you've got this whole other camp saying, well, this is, burning all this energy to mine this Bitcoin and it's not sustainable and all this stuff. And it's like, that seems kind of like a slippery slope there. And then all of a sudden he started getting backlash and then they kind of backed out of that. And then it was Dogecoin, but it's definitely been a fun saga over the last couple of years as an investor. I've been investing since the 90s when I was in college in the stock market. And it's been kind of a circus with some of this stuff. You think of all the celebrities that are involved with this and the shenanigans and the news and, you think of the meme stocks and Wall Street. I mean, it's entertaining. I think it's good because there's going to be investors that will be sticky from it, that will become investors. And some of those stocks, you can make money on some of those stocks. Some of them are investments and some of them aren't. And, but at the same time, it's like, I respect that whole community because it's like, they have an idea and they go after it. It's like, you can't tell them anything different. It's like, hey man, I did the same thing. My first investment, I bought a speculative type stock like that back in the 90s and it went to zero, and maybe it won't, maybe you'll make a lot of money. A lot of it's, timing and things like that. But this whole thing over the last couple of years with Robinhood and a lot of the retail traders and the pandemic, it's just dumped fuel on this fire and just created like all these secular growth trends that I talk about. And you think of, AI and you think of cloud computing, of course, you're really familiar with cloud too, because we worked in that space in the SaaS software, but you can think of any secular growth trend from autonomous vehicles to robotics. They all need semiconductors. So that's cool too. Like you can invest in things like crypto, but cryptocurrency needs computers and computers need semiconductors. So like I call semiconductors the new oil because literally that whole, industrial revolution 4.0 that you talked about, that doesn't run on oil anymore. That runs on, semiconductors, right? Data centers, 5G, like the whole universe. And that's interesting too, because a lot of the bears for gold will say, well, Bitcoin and cryptocurrency doesn't make sense because if I lose power, I can't use it. It's like, well, if the whole world loses power, we probably have bigger problems, but there's always interesting arguments on both sides of the fence. You know what I mean? So
you can still exchange that between two digital wallets, even if the network's not available. So it's not like you can't do an off-chain transaction. So yeah, that's not a very good argument if they understood the tech.
So explain that. So you at some point you would need electricity though, right? You could do that for as long as you want, or how does that work?
Yeah, I mean, at some point you would need electricity. I mean, you would need electricity, of course, to charge your phone if you're doing it with your phone. You could do it with math. I mean, it would be a freaking long math problem. But yeah, I mean, theoretically, I mean, you could do it with math. I mean, it's just an algorithm. It's a logarithmic algorithm that you'd have to figure out the problem. But yeah, you could do it.
I'm out. Math's not my thing, man. I'm out. So, I'm a finance guy, but when it comes to calculus, nope, that's not me. I actually was going to be a computer programmer. And when I got to college, back then it was C++ because, we're older guys, right?
Sure.
And it was like, I'm like, nope, international business. So I hit that first calc class and I'm like, no, that's not me. I'm not wired that way. I'm more of a people person. And I like, I understand the business and the economic side of it and working with people. But, I just decided it wasn't for me. And I like accountants, I respect accountants a lot, but I could never be an accountant either. Everybody's wired a certain way. Like you probably wouldn't do great in a cubicle from 9 to 5 either. Right. So, so yeah, that's what it is. But I appreciate your time, Tommy. We're going on an hour here, but definitely check out Tommy's channel. Definitely subscribe to my channel as well. We'll maybe do, one of these every month or every other month, just
absolutely
into the mix and cover. There's a lot of topics we can cover. We can talk about this for hours. So appreciate your guys' time and attention. Hope you have a great rest of your day. Take care.